So you see the financials, the industrials, the energy stocks, the real economy plays have been thriving this year, even as the overall indexes have been stuck. Is it as simple as that, or do you think we're going to have to, have a little bit of test of conviction in those cyclical trades?
It is never simple, Mike. You know that for sure. And I'll take the first 5 days because, this is where I've been positioned for a while. Quite frankly, I thought that interest rates would be here where they are today last year. Right. So the fact that we're kind of just catching up right now, it just speaks to the fact that there's a lot of things happening in terms of the economy. The economy is growing very nicely. I was very encouraged with the ADP numbers, but not just the overall numbers or the 3-month average. I'm really encouraged that the services jobs were really very exciting and a lot stronger than expected, because that's a big part of our economy, almost 70% of the economy. So we want to see service jobs come back. That is encouraging. But we've talked about the economy overall and all of the data. I mean, those ISM numbers, both manufacturing and services this week, really strong, above 50 for over 19 months. We have auto production that's starting to ease as well. And we're still 25% below in terms of production rates below pre-pandemic. So there's a lot of good things that are happening in the economy, and that's why interest rates are going higher, in addition to the inflation. Now, the number today, I think, is going to be a hot one, just given ADP numbers. But I think you also want to look at wages. That's really important. And, of course, we had the ECI, the Employment Cost Index number at 6% wage numbers on a seasonally adjusted basis in the third quarter. So wages are running hot, and that's a big part of the inflation story. And that is why another reason, in addition to the economy being strong, that is another reason why I think interest rates are headed higher and why the Fed has to do what they've got to do. Normalizing policy is a good thing. They should be doing it, and we should embrace it.
Hey, Michelle, yesterday we got that ADP number. It was super hot, like and Steve Leisman in his real-time reaction said, well, I've been watching the numbers. He's been getting the real-time updates from other sources, too. And the numbers yesterday really didn't take into account what's happened with Omicron. Is the Fed going to care about that? Are they going to think about that? Or if they get a strong signal today, is it going to be what Stephanie just said? And look, we got to worry about the wage inflation at this point.
Yeah, I think is kind of Stephanie alluded to. Also, there is this ability, or Mike, I guess, alluded to it. We're sort of, to some extent, looking through Omicron, because the expectation is really that we aren't going to go back to the level of restrictions as we see the case numbers come down, which people expect will happen as we go through the month of January. The economy and activity will pick back up relatively quickly. So I don't think that the Fed is going to take even the expectation that maybe the January numbers, which will show a larger Omicron effect, may not look as good as today. I just think they're going to be kind of looking through that. And as we've talked about, there are a lot of reasons to expect inflation. The Fed is very rightfully concerned that these inflation pressures are going to be more persistent. Again, with the wage numbers and supply pressures also expected to continue. This is what they're looking at. And I agree. The idea that both inflation and employment sort of, you feel like the prerequisites for action appear to be met. The Fed, it is time to start to normalize. And of course, the longer you wait, the bigger the task at hand. So I think the Fed has set the table, and I think the economy and the inflation numbers warrant, again, beginning to normalize policy.
And I guess, Steph, clearly there could be a weaker than expected number. There's been quirks in this data. It's been hard to deal with the seasonal adjustments with a lot of moving parts. Do we just completely shrug that off if we get another weak one?
We probably do shrug it off to some degree. Initial claims are really more the leading indicator, Mike. You know that, right? So that's the thing that I'm looking at in addition to the ADP numbers. And so these are lumpy numbers. I always look at the 3-month moving average anyway. And again, I think the headline is less relevant versus the wage number, because that's the thing that is more inflation, the pressures to inflation. Mike, we're going to get next week earnings. Guess what? We're going to start to talk about fundamentals. And I think, especially with the banks, and I think that's going to be really the highlight for next week. And we're going to start focusing on fundamentals and less on the macro and less maybe even on the Fed. So yeah. I personally am looking forward to that. And we start next Friday.